hearing will come to order. Would someone close that door, please? This hearing begins what will be one of the most important initiatives that this committee will be undertaking, and that I hope the whole Congress will undertake. In 1977, before any of us on this committee got here, the Congress passed the Community Reinvestment Act under the leadership at the time of the Senate Banking Committee Chairman, Senator Proxmire. It has worked very well. I made a point of asking Larry Lindsay, who was the Federal Reserve Governor with responsibility for consumer and regulatory affairs some years ago, but not all that long ago, how he evaluated the Community Reinvestment Act and other consumer protection acts. Particularly, I wanted to ask him if he thought they had interfered with the ability of the institutions covered, the banks, to perform their very important function, the function of intermediation in our financial system, of gathering up relatively small amounts of money from a large number of people and making them available for useful work. He wrote me back a very useful letter, and I forgot to bring it with me. I will insert it in the record, saying that, and this is Mr. Lindsay, a conservative who had served in Republican administrations, and his conclusion was that there was no evidence of any harm, that there was no indication that this had in any way interfered with safety and soundness, and that in fact it has done a great deal of good. We're now looking at this act 31 years later, and there are two areas where I believe we should be amending it to enhance its effectiveness. First, if you go back to 1977, the Community Reinvestment Act covered most of the institutions that did the kind of activity it was meant to cover. 31 years later, there has been a great increase in the number and type of institutions that engage in these forms of activities who are not covered by CRA. And so the first question we will address is whether or not, and if so, how, to expand the obligations of the Community Reinvestment Act to institutions that now do the kinds of things that banks were doing 31 years ago, but either weren't doing them then or didn't exist then. That is a much smaller piece of the relevant action is now covered by CRA that should have been. Secondly, there are questions about the enforcement of CRA. There have been arguments from some that it has been that there's been excessive paperwork, and we are open to listening to that, particularly from some of the smaller institutions. But there is also a concern that many people have, myself included, that there is a limited chance to enforce CRA. CRA ratings come into play when there's a change in ownership of the bank, but that shouldn't be the only time in which that happens. There ought to be, I believe, some forms of enforcement, and not just enforcement in a negative sense, but reward for those institutions that have done well. There are also questions about whether or not the range of activities covered and for which entities get credit should be expanded. So that's the topic. It's a serious one to me. I think the Community Reinvestment Act is a very important operation of our overall system. The urban areas in particular are concerned about it, and this hearing begins what will be a fairly thorough study, and I am hoping that we will begin the legislative process. We may not be able to complete it this year. It's February of the second year of a term. We had other things, but this is the beginning of a serious legislative process. Finally, I just want to apologize. At 12:30, I will have to go to a meeting that the Speaker has asked me to go to, and at 1:15, I leave for the White House to be at the signing of the stimulus bill, and I will therefore be leaving the hearing in about 2.5 hours, and we have a long panel, but I do want to assure people we are monitoring this very closely, and those who will be testifying later are not going to be speaking to a bunch of vacant chairs. We give this a great deal of serious consideration. It's a busy week. We're only in for a couple of days this week, and the attendance does not reflect the interest, I can assure you. And with that, I'm delighted to call on the ranking member of the subcommittee on Housing and Community Development, the gentleman from West Virginia, Ms. Capito.
Thank you, Mr. Chairman, and I want to thank all of the folks who have come in through this difficult weather to testify today on an important issue. The ranking member of the committee, full committee, extends his apologies for not being here and asked me to come in his stead and offer the statement. No government mandate should continue in perpetuity without congressional oversight, and CRA is no exception. The banking industry and our credit markets have changed dramatically, we all know, since CRA was first enacted in 1977. American innovation, along with increased industry competition, has created credit opportunities today that were unimaginable years ago. These market forces have prompted some to question whether significant regulatory burdens imposed by CRA, particularly on small community banks, have come to outweigh any benefits the law was originally intended to confer upon underserved communities. The evidence suggests that deregulation and technological advances have spurred new lending to once underserved communities over the past 3 decades. For example, a 2000 study by an economist at the Dallas Federal Reserve Bank found that CRA-covered lenders as a group devoted about the same proportion of their home purchase loans to low-income neighborhoods from year to year. Even though those institutions were subject to CRA, their lending in low-income communities grew no faster than other types of lending. In other words, CRA may not be necessary to ensure that all segments of our economy enjoy access to credit. There are some who argue that CRA should be extended to credit unions and other segments of the financial services industry that currently fall outside the law's coverage. Indeed, rather than expanding the regulatory dragnet, our focus must be on providing appropriate regulatory relief to our financial institutions that are free to serve the needs of their communities, unshackled by outdated regulatory mandates and bureaucratic red tape. It's for that reason I look forward to working with my colleagues on both sides of the aisles to develop an appropriate regulatory relief package that Congress can act on this year. The bill we passed last year was a good first step, but much remains to be done if we are serious about maintaining a strong community banking sector in this country. Thank you again, Mr. Chairman, for holding this important hearing. Although we may have some philosophical differences, imagine that, we agree on the need for this committee to fulfill its oversight responsibility to review the law's implementation and the effect it's had on depository institutions, underserved communities, and our economy. Let me again thank the witnesses for their testimony and look forward to the hearing. Thank you.
Thank the gentlewoman. I will just comment, if I have no objection. I appreciate, seriously, her reference to philosophical differences. There is an understandable unhappiness that some people have with disagreement that appears to be for its own sake, but the notion that legitimate philosophical differences among elected officials shouldn't be expressed has started to bother me. I will confess that all this talk about being post-partisan seems to me to devalue democracy. I'm beginning to suffer from post-partisan depression here because I don't want to see legitimate issues that ought to be discussed somehow subordinated or that discussion devalued. And I am very proud of the fact that under my predecessor, Mike Oxley, and now, I think we have been a model of how you can have legitimate philosophical debates without in any way impinging on our ability to work together in some other areas. So I thank the gentleman for saying that, and we're going to continue to be a place where we will be partisan sometimes and bipartisan other times without either one eating into the legitimate area of the other. The gentleman from Texas.
Thank you, Mr. Chairman. I thank you and the ranking member. I concur with you. Honorable people can have honorable disagreements. I am so proud to be here this morning with the CRA being a topic of discussion. I had the good fortune of being president of a branch of the NAACP, and I have a first-hand understanding of how the CRA can be of great benefit in terms of helping financial institutions to go into areas that they may not have had a real good look at. It has been of great benefit to organizations like the NAACP, community-based organizations, and I'm hopeful that we will be able to make sure that it continues to to help and aid in communities that are underserved. I, unfortunately, will have to leave. I have a Homeland Security meeting. Secretary Chertoff is before the Homeland Security Committee that I sit on, and I also have a piece of legislation on the floor of the House. But I assure you, I will be monitoring the hearings, and I am eager to do what I can to make sure that the CRA continues to be a benefit to underserved communities. Thank you, Mr. Chairman, and I yield back the balance of my time.
Next, we will hear from the gentlewoman from California, who, as chair of the Housing and Community Development Subcommittee, has, of course, a great interest and involvement in these areas. Ms. Waters.